to the Capital Discussions Roundtable. I'm Tom Nunemaker, and we've got our guest Ricardo today from Option Elements. Before we get started, a quick disclaimer: the Capital Discussions is not a broker-dealer or an investment advisor. This presentation is for educational purposes only. We don't know your situation and have no way of knowing what level of risk is appropriate for you. We're not making any specific trade recommendations. The risk of loss in trading options is substantial, so please be aware of all of your risks prior to placing any trades. Hypothetical computer-simulated trades are believed to be accurately represented. However, actual profit or loss may vary due to market factors such as liquidity, slippage, and commissions. And this is at the bottom of all of our web pages if you wish to read the whole thing. So with that, I'll give you the ball, and while I'm doing that, welcome back, Ricardo. It's nice to have you. And just for those who don't know Ricardo, he's completely bilingual in English and Spanish, so it's multicultural. And Ricardo also lives in Europe, same time zone I do, so that's also handy. But Ricardo's well known in Spain. I guess you spend a lot of time at the Spanish stock market being interviewed as an option expert and a lot of credentials. So we're pleased to have you, and maybe you want to say a few more words for the people who don't know you.
All right. Okay, Tom, thanks. Can you see my screen okay?
Not yet. Have you shared your desktop?
Okay, hang on.
Okay, I see it loading.
Should come up now.
Yep.
Yep. Okay. All right, Tom. Thanks a lot.
Okay.
Thank you. Good afternoon or good evening to everyone here. Nice to be back, and really a pleasure to be with you all. As Tom has said, I'm in Madrid. I'm half Spanish, half English, and I've been trading options now for a long, long time. I've been trading my own money. I've been trading funds for other people as well. And I've been teaching and mentoring options for a long time also. The only thing is I've been doing it all in Spanish. As Tom says, I really am sort of considered as a multicultural fellow. You know, I was born in England. My nationality is British, but I've been 22 years here in Spain. My father's Spanish. You can see that my surname is Spanish. And that is me up in the left-hand top corner at the stock exchange here in Madrid. Now, I manage the Option Elements Spanish division, optionelements.es, and I have, or I will now be starting to help Tony Sizemore, who's my partner on the .com site in English, with a second trading room for the website. We'll be starting that very soon now as well, and I'm very excited about that. Basically, I'd be doing sort of the trading room, that second trading room in English, in sort of the European hours, and even early in the morning possibly for the Asian market. I'm also the representative for OptionView in Europe and in South America. I have also just, I'm sorry if this is a bit repetitive, I was on the round table last week talking about all this as well. So if there's anyone here from then, I'm sorry to be a bit repetitive. Just got out my new ebook, Introduction to Options, but that's in Spanish. So I'd like to do one now in English as well, of course. And I do a lot of sort of translating, interpreting as well, Spanish, English, English, Spanish, for specialized language in financial markets and especially in trading. So I'm here today to present our new, I say our because behind me there really is, you know, quite a team of people that help us in Option Elements. So I know it says Ricardo's Premium Alert Service, but really and truly, you know, there's several people there that are helping me with this. So, you know, I talk about we because it is a team effort. This is a new alert service that we're doing just at Capital Discussions. It's a very practical, quick in and out service based on 3 strategies, based on a lot of analysis, research and investigation that we ourselves have done at Option Elements, based on three types of strategies that quite honestly aren't that really complex at all. They're sort of strategies that I've sort of detected myself over the years. Basically, what the sort of the added value that we've put in here at Option Elements with our research and development and algorithm trading systems and et cetera, is basically just to get a better timing on getting in and out of these strategies. So maybe the sort of the first part of the presentation is a bit overwhelming, but please do not be overwhelmed because it really isn't that that complex. At the end of the presentation, I've got something there saying, we do all the work, you just follow the alert, and basically that's what it is. We're trying to make your life easier, and I can promise you they are very, very profitable strategies. They're well-tested, well-managed, well-researched strategies, and the whole sort of alert system here really can be quite lucrative. We'll see at the end of the presentation also sort of what type of weighting we give percentage-wise of our account to each trade. So without further ado, I'll start the presentation. Of course, any questions or doubts on the presentation, just let me know through the chat. Where is the chat?
I'll keep an eye on that for you.
Oh, yeah, okay, all right, thanks, Tom, thanks. Oh, but and haven't said anything about Tom, but Tom's been a good and loyal friend of mine now for many, many years, even though he is a few kilometers away there in Germany and I'm in Spain, but hopefully sometime in the future we may be living closer, we'll see. Anyway, let's get on with let's get on with the presentation. It is possible to combine in one unique tool a trader's experience of years in the market, basically we're talking about myself here, with the power and potential of quantitative algorithmic low latency systems. Basically, these systems come from the team of people I have behind myself here at Option Elements. It is also possible to develop options-based strategies on market patterns that repeat themselves time after time. Strategies that have been tried and tested through back testing, sorry about the typo there, testing, and other types of stringent analysis. Strategies and systems here have been coupled together and developed as one to exploit the diverse correlation that exists between each of them using continual risk control and sound money management. What's happening here is that the three strategies that we're going to be using on the alert system, and as I say there, two of them are very short-term strategies. Those two will basically be executed once a week. The other one is a bit less frequent and is done on a longer term basis, but the correlation between the three of them is basically non-existent, which is usually good, and we'll see at the end of the presentation when we have the performance chart of the three strategies, how that performance chart is sort of smoothed out compared to the individual performance charts of each strategy because of the non-correlation between each of the positions, each of the trades. So here we have the origins of the system, how it began. Yeah, as I said, I've been many years now trading the markets, studying the markets, back testing the markets. I've been many years being representative of option view. So I've had that back tester there and I've been using it for many, many years. And over those years, I've identified certain correlated patterns in the market that match or sort of coincide with a number of market indicators such as the following: accumulation and distribution, average true range, ATR, average true range, fractal component price, implied volatility. And when we're talking about implied volatility, in one of the trades, we're talking about the index of the implied volatility index of the NDX, which is VXN. For those If you that don't know the index, I'll explain a bit more about this when we get to the strategy, and basically 10, 30, and 90 periods of the average implied volatility. Open interest and personalized technical indicators that we've sort of created ourselves here at Option Elements. So basically what we've gone and done is just program, quantify, and test, and test, and test. So our systems experts at Option Elements started developing sets of algorithms capable of replicating and following the patterns that I had sort of detected. We've even used artificial neural networks that have also been used to instigate the work process. Obviously, people that don't know what neural networks are all about, they're sort of structures that process information in the form of a tree, where each branch implies a change in the way the data is processed after that. They are used to look for solutions that can be given for different parameters and conditions of the market. It's all a bit complex and things, but we don't have to get too much sort of into this. Now, the Option Elements proprietary algorithmic system and in-house transactional optimizer are they're basically based on the QuantStar software and our own risk manager and execution engine. The ultimate objective of all of this is sort of what I said at the beginning, was to inevitably detect triggers for certain high probability simple option strategies that could easily be followed by traders of beginners and advanced levels. So at Option Elements, we've been researching, investigating, innovating these strategies and systems, and we've now provided tools to develop and implement these simple trading systems, providing extremely high risk reward ratios, and we've got the probabilities firmly on our side. So let's take a look at the three strategies in question. You'll see that they're not complex at all. They really aren't sort of complex at all. I think the actual strategy in itself is pretty easy to understand. The key to all of this is, the key often to trading is the timing. First of all, and I'd say the most important strategy here is the Platinum Rut 2000. Here, basically what we're doing, we're using short-term trades, options of very short expiry, weeklies and shorties, and the trades usually last not less than 3 days and not more than 5. So a duration of 3 to 5 days, and it's traded over the weekend, and we'll see now why. The second strategy really has nothing to do with the Platinum Rut 2000. Golden earnings plays here. We've done a lot of work here. Just check something here. A lot of work on this. Basically, we have a base of strategies for earnings announcements. What usually happens when a company releases its earnings, it releases its earnings sort of 4 times a year, usually in January, April, July, and October. Now, we have a base of strategies that usually work out pretty well. What happens with earnings announcements is that because of the uncertainty of what those results are going to be, a lot of implied volatility is priced into the options. Implied volatility just keeps increasing as we get nearer to the date. And then as soon as the results are released, either after market close on one day or before market close on the next, there can or not be a big move in the shares, depending on what sort of results have been released. And all the implied volatility that has been inflated into the pricing has suddenly disappeared. So here we're using also price volume, open interest, and implied volatility. These are sort of the parameters and parts of systems that we've been using ourselves to pick the best strategies out of that base of strategies that we've got. I may remind you that OptionView, and I did a presentation on the tool of OptionView, OptionView's tool on earnings last week. Just remind you that OptionView has got this tool for earnings results, but this is not. So this has helped us in our research, but it's not based on this. And then third of all, again, sort of really no relation to the other three, the volatility edge. Now this is the trade that is less frequent and is looking for high probability positions implemented on a more medium-term basis based on more dispersed patterns and NASDAQ 100 volatility indicators. Basically what happens here is when we get to certain levels of implied volatility on the VXN, which is the index of the NASDAQ 100, as I said earlier, we'll be looking to get into a trade. This trade can be longer term. This is really an income type options trade where you'll see now when I give you an example, we don't use any calls. There's no sort of upside. There's no upside risk on the position, and it is a position where we could have some type of an adjustment. So that would be part of the alert service also. The thing is, with golden earnings plays and Platinum RUT 2000, there are no adjustments. There's a stop loss on Platinum RUT 2000, and golden earnings plays is just in and out. It's just in one night and out the next morning. Okay? So three quite sort of different types of strategies and really very little, if at all, any correlation between them. Now then, the Platinum RUT 2000 is based on, as I said, fractal component price, open interest, and average true range. We use strangles and iron condors on weekly and shorty options. And why is it traded through the weekend? It's traded through the weekend because what we're doing here is exploiting weekend increased decline in premium of RUT 2000 indexed options. I'm sure many of you here know that the premium of options for the weekend, the options have got to lose their time premium for Saturday and for Sunday when the market is closed. That premium really starts getting out of the option pricing sort of from Thursday onwards, I'd say. Often even Wednesday afternoon, but sort of Thursday onwards. So this is what we're trying to exploit here. And this is an excellent strategy. This is our track record in percentage terms. You'll see the track record now, as I said earlier, for the total for all three strategies, following the weighting that we advise people to use when going into these strategies. But I can also understand as well that there may, because I've sort of realized this in the last few days, that there may well be a lot of you that are just going to follow one of the strategies, either the Platinum RUT 2000 or the earnings strategies. These are both, as I said, strategies, very quick in and out strategies. You don't have to be the whole month hanging around waiting for adjustments, following the market, in the market, exposed to the market, stress, all that. No, it's just in and out on a weekly basis. And then we have the volatility edge, which more or less we're talking about sort of an average of about 4 trades a year, okay? 4 trades a year. So as you can get your bearings on that a bit. Here, the graph is good. For the last 2 years, we're nearly at 60%. That's sort of an average of a bit under 30% a year. And really up until sort of this period of late here, I mean, lately it's just been excellent. Lately, I don't know, we've had about now, and I was saying to Tom earlier, thing is lately we've had about 10 weeks, 10 winning weeks in a row. And I said, we're going to sort of start this service, and on the first week we're going to get a loser because we've got 10 weeks there of pure winnings. But I mean, that's how it goes. I'm not going to delay the start of the service because of this, but you can see here how of late this strategy has been doing really, really well. But for example, I mean, here we sort of had 10 weeks where it didn't go that well. We had winners, losers, winners, losers. So this was sort of the worst sort of 10 weeks to 12 weeks in the last 2 years that we've had. Now the golden.
That's a really nice equity growth chart, though. There's not a lot of big dips in it, which is what you're looking for.
No, but you'll see the fourth one, which is a summary of the three of them. You'll see that, Tom, and then that's a real graph. Anyway, golden earnings plays. Okay, this again, we're on price and volume patterns, levels of accumulation, distribution, and personalized volatility indicators. Basically, measuring the amount of implied volatility that has increased as we get nearer to the earnings for that quarter. And we base the strategies on medium and high volume US stock options. Here we also look for both lateral and directional movements. I mean, basically when we're looking for lateral movements, what we're doing is we're sort of either selling a triangle or putting on a calendar. And basically what we're looking for there is for all that time premium to go out, all that implied volatility to go out, and counting on a move that really isn't that big, okay? When we're looking for, they're basically we're selling options. When we're looking for directional movements, we're buying options, and we know that we're buying very expensive options because the implied volatility is so high, but we think we are basing our trade on the fact that it's worth paying the price, and that the movement that's going to make either up or down is going to make our trade worthwhile and make our purchase worthwhile of those expensive options. Now then, this graph on the earnings plays, yeah, it looks better. It is better for the last 2 years. But I must say this is a much more speculative type of trade. Quite honestly, the graph doesn't really show us the reality of that. Trust me, it is a more speculative type of position. And our advice on this is you'll see at the end the sort of the weighting of the amount of capital, percentage capital of our account that we put up for each trade. This is only 20%. Okay, this is only 20%. So this is actually the trade where we allocate the least amount of money. I know the graph looks excellent. No, it is. It is. But it is a much more speculative type of trade, and you can have a few losers in a row, which we don't like. But in general, following the trades week by week, this really is another great type of strategy. And I must say, we continue, especially with the golden earnings, we continue to develop, to research, and to test back even further in time these strategies. The thing is that the base of strategies, well, the majority of the base of strategies that we use for picking the best trades to execute on the earnings, OptionView's only gone back 2 years. So what we're doing is we're testing many sort of good-looking strategies here, the best, but even further back in time, because OptionView has got 13 years of historical data where we can backtest to. Got a question there. Why do your charts only go back to 2013? Well, it's because we've only gone back to that for this presentation. Who's that? Walt. Yeah, we've only gone back to 2013 for the presentation, but we can get charts further back than that. The thing is the RUT 2000, the strategy, we have got figures for 2010, 2011, 2012. We haven't got the figures for the earnings, and we've got figures for the volatility edge strategy since 2012. So you've got to do a bit more research and investigation there. But I'd say for the most important of them, which is the Platinum RUT 2000, there we've got a lot of figures. We've got a lot of figures. But basically, the answer to your question is those are what we've brought up for the presentation today. But if you want, we can send you, we'll put more up on the web anyway for everyone to see. Here, volatility is based on fluctuations in the implied volatility levels of the Nasdaq 100. Levels, again, we use this a lot, accumulation, distribution, and personalized volatility indicators. We implement short to medium-term high probability income trading strategies, as I said before, but without any upside risk, no sale of calls on the Nasdaq 100. The general environment for entrance triggers are those of higher implied volatility, because what we're doing here is we are selling volatility. And this graph is a bit weird because we can be, as in 2013, sort of 4 months out of the trade if we don't get an entrance, if there is no trigger sort of to go into the market, well then we're just out. As I said before, sort of 2014 we were in the market about 4 times and even less in 2013. So that's why the graph looks a bit weird. But again, I mean, you know, it's not bad. 18% for the last 2 years. We've never had a loser. We've never had a loser on this strategy. You've had losers in the other 2 strategies, but we've never had a loser on this one. Kevin, do you consider correlation of these 3? Do you consider? Yes. We've looked into the correlation of the 3 strategies an awful lot, as I said before, Kevin. Yeah. Yes. I did mention that at the beginning. Very uncorrelated, if that is your question. If I haven't answered your question, please let me know, and I'll try and answer it better. But no, there is very little correlation between the 3 strategies. Weighting assigned to each strategy, allocation. Platinum RUT 2000, 50% of capital. Golden earnings plays 20%, as I said before, and the volatility edge 30% of capital. And when we do this on a half-reg T account, a half-reg T account is $25,000 account in Reg T. We get a graph where for the last 2 years it's sort of at about 90%. That's nearly, it is. It's sort of 45% a year. But look at the graph, how it smooths out. It's not different to the golden earnings graph. Completely different. Okay. And again, I want to stress the advantages of this alert system. We're talking about very short-term in and out strategies. You know, there are a lot of disadvantages of being exposed to the market for the whole month, looking out for adjustments, being tied down to the market. If you want to go on holidays or whatever, or have a long weekend, you sort of, you know, you're still tied down to the market for that and things. So this is one of the, apart from how profitable these strategies can be, and I'm sure how this alert system, the profitability of this alert system, how it's going to prove, you have got that very interesting advantage as well of not being, you know, tied down to the market the whole time. Before going on about what's included in the Surface, I did want to sort of show you guys the at least the last trade of each of the strategies. Hang on. Okay, so here we have option view. I'm sure a lot of you are familiar with this software. And what we're going to do is we're going to see the last. Well, you know what? Today we got out of the Platinum Rut 2000 strategy, and it was a loser. It was a loser. So what I was saying to you before, my worries, the worries I had expressed to Tom about having a 10-week streak of winnings. Actually, I feel better about starting the service now because today we have actually had a loser. Well, what I'm going to do, that's because the market has fallen a lot today. We have finally had a loser in that trade. So what I'm going to do is I'm going to show you how last week's trade started, because I'm not really ready to show you this week's, and really, I mean, quite honestly, to show you a losing trade of this week after a 10-week streak of winners, you know, it's not really a true resemblance of what's happening. But yes, this week has been a loser, so I feel a bit better now about starting the service. So the week before we started on this date at about, and more or less you'll get a sort of an idea of what's happening here. That was the start. Here, the site. This is all based on a margin portfolio. So please, you know, sort of just divide all this. This is obviously not. This is not an example of the account size for the trading service, but sort of just divide all this. I don't know, between 5 or 6 or whatever for a half Reg T. Because also on Reg T you're not going to get the possibilities of guarantees. Just dividing this by 4. So anyway, that was sort of the start, and we got out on, this was Thursday the 26th. We got out Tuesday 3rd. About 5 days. And those were the winnings. So percentage-wise, I don't know, sort of 20%. The thing is if I bring up the reports here, you'll see all these weeks of winnings that we've had lately. This column is the weeks of winnings that we've had of late. Nearly 4,000, 6,600, 4,400. So just divide this by 10 or whatever, the numbers, so as we get a bit more of a bearing on this. This is for a big margin portfolio account. 5, 13, 7. And here we have a loss. Here we had a big loss, okay, back in December. And so this sort of time period wasn't going that well. I think it was going okay, but it wasn't sort of flat. It's been late these last few weeks where it's been doing so well. Okay, let's see. That's an example of the Platinum Rut 2000. Now what I wanted to show you was an example of the earnings strategy the last one we've done, which was on the 4th of March. So this is an example of strategy number 2. Here the strategies are always open sort of way late into the day, sort of an hour or half an hour before the market closes. And this was on Canadian Solar. Now Canadian Solar, this is the 4th of March, my mother's birthday, and Canadian Solar were announcing results before market open. BMO, AMC is after market close, BMO is before market open, on the 5th, the day after, the morning after. So we expect movement in this company, in their shares. Let's have a look at the price. And the volatility. Yeah, the volatility has been going up, but it's not a typical example of the amount of implied volatility increases that usually happen, that is usually generated in these types of positions. Okay. So what we've done here, we've basically just bought a straddle, 5 puts and 6 calls, so as we start off as much delta neutral as possible. Okay, there we have chart. Basically what happened here is we just went to the end of the day the next day. So we went from we closed out the next day, but not in the morning, sort of in the afternoon. So what I'm going to do is just go to the next day, Thursday the 5th. They released their earnings. It's up $4.41, which is quite a jump. And obviously, that's a nice gain on the call side of the straddle. Okay, that was our last strategy that we've done on earnings. And our last trade on the third strategy, the last example, the example of the volatility edge, we have to go back now to the 2nd of February. Okay, so we're going to go back to the 2nd of February. 2nd of February at about time 4:30, 16:30. Here we're on European time. It's 8 o'clock. Got an hour's difference with the States now until the 28th of March, because in the States you've changed you put your hours, you put your clocks back. We haven't done that yet. Sorry, forward. Okay, Monday the 2nd of February. Go to NDX. Just let's have a look at the VXN, okay? And there we see it is a bit higher than what it has been. So here we go to NDX. Our systems have given us a trigger, an entrance. Doesn't often happen for this trade, as I said. It's very simple. This is more of an income trade, as I said. Here, if things do go wrong, if things don't work out quite as expected, please expect adjustments. We have obviously a risk plan and management plan for all of this. As you can see, there is no upside risk on the trade. Let's have a look at the NASDAQ. Okay, the Nasdaq's come down. It's near a support there. That's when we got in. Basically, we're selling Vega. That's the key to the strategy more than anything else. We've got a bit of theta there on our side, and delta is 3. And anyway, this trade, which is, as I said, the last trade we've done of this strategy, we were out on 7 days later. So the strategy, I mean, it's much less frequent than the others, but we don't really hang around that much in the strategy either, too much either. And there we go. Okay, the Nasdaq was down that day, but in general, let's have a look at the. Well, we're up. I mean, it's moved, the Nasdaq's moved up. Basically the VXN has come down since we started selling volatility here. The gain is about $300 odd. Look at the VXN. We can see there. We sort of sold up here. It has come down. It's actually been lower. I don't know why we got out this day. It seemed a bit late actually, but anyway, we sort of got out at a worse time period. But I mean, this, as I say, this all, the in and outs is all based on our own in-house low latency trading systems. We've got the strategies there. We really do know what we're doing, and we base our entrances and exits on our own in-house systems. Okay.
We have a couple of questions, Ricardo. Walt asks, what do you use for stop loss on weeklies?
The cash flow of the strategy. Who's that, Walt? Cash flow of the strategy. It is a big stop loss, Walt. It is a big stop loss. That on those results I just showed you now for the RUT 2000 Platinum strategy, there was a loss. There was a big loss there. That loss was that day it hit the stop loss. Okay. It hit the stop loss, and we've got to get out. We've got to get out. That's what our systems have told us. That's what our backtesting has told us. That's what our research has told us. And, you know, it hurts. It hurts, obviously, to get out when you're stopped up like that. It doesn't often happen. It really doesn't often happen. It's a big stop loss. It is a big stop loss. It's got to equal the cash flow of the trade. But when it hits it, and we've got to get out, and we have a loss, okay? So, yes, we do have a stop loss for that trade, yeah.
And then Tim asks, are your fills based on actual execution, or are they on paper?
They are filled on actual execution, so they're taking into account slippage. But sometimes, quite honestly, we could sometimes take into account a bit more. If I'm really honest, we could, depending on the market can give you, you know, how volatile the market is, what time of day it is, the volume that day on that particular strike, many different scenarios there. Also, you know, Russell usually has better executions than the Nasdaq and things. But quite honestly, we are taking into account slippage, but sometimes we could be taking it into account a bit more, but sometimes even a bit less, you know. It really depends. It really depends, okay? Sort of what time of day and everything else that I've said. So please ask, I mean, if there are any other questions, lay them on, please. The service will include at least 8 option trade alerts per month. Okay, at least 8 per month. You're going to get video recaps of results and performance for each of the strategies, real-time trade signals for entrance and exit for each trade. The alerts are sent out via SMS and email. And the signals are frequent as they are short-term in and out trades. Access to all the trade messages, recordings, documents, and images while you are a subscriber. Obviously, if you're not a subscriber, you won't be getting this. And then a monthly real-time track record follow-up of all the strategies. Communication with me, just send me your emails or whatever, and for any questions or queries or doubts, and I'll be happy to answer them. And Tom has very, very kindly set up a private forum exclusive to the service. And apart from all of this, there's a no risk 15-day trial. So you can test it out before putting any money down at all for the service.
And I put a link in the chat for people to go to the page if they do want to order or look over more information.
Great, yeah. Okay. What should I put my email in there, my email address in there as well, Tom, if anyone wants to ask questions or things, or I know I've got email address for Capital Discussions.
Yeah, we've got Ricardo at Capital Discussions set up, so I'll put that in the chat as well.
Yeah. Ricardo at Capital Discussions. The price, 15-day trial, okay, 119 for a month, 300 per quarter. They were saving 16%, 550 every 6 months, saving 23%. Really, easily, the cost of the service should be covered by these strategies each month, short-term and frequent strategies, easily. So, are there any more questions, any doubts, anything else that really needs to be explained about the service? I don't know if I've been clear in the presentation.
I think so. No more questions so far.
Right.
And if you did forget that URL, I'll put it in the library on the replay. And it's also linked on the Capital Discussions main site under products. And Peter asked, is this separate from Tony's service?
Yeah, well, I mean, Tony and I were working together. I've been a partner now of Tony's for many years, and I've known Tom now for many years as well. And I'm really looking forward to participating in the .com site with Tony. For me, you know, I think it's a great opportunity. I'm really looking forward to it. Quite honestly, I've got to brush up a bit on my presenting and my teaching and mentoring in English because, you know, here in Spain, because everything I do is done in Spanish, you know, I'm a bit rusty a bit sort of on presenting and teaching things, but all I've got to do is just get a bit of practice and I think I'll be a bit more fluid on my presentations and teaching and things. But yeah, I'm really looking forward to that. As I said, the sort of the timetable for this second trading room that we're going to be doing at Option Elements is sort of is European time and possibly early in the morning for sort of people in Asia. And these strategies, similar to Tony's, maybe one is sort of similar to Tony's. I don't know. I mean, the thing is that, quite honestly, you know, however much I love Tony and I were different. You know, I'm sort of English, he's American, he's on a different timetable to me. Our styles of teaching are different. Our styles of trading are different. We're different people. We love each other very much, but we're different people. So, you know, I think it's interesting. I think it's interesting that we can be doing this sort of second trading room at optionelements.com. I wish that for the division of the Spanish division, optionelements.es, there was such a big market out there, and that Tony could speak Spanish, that I could get Tony to help me with the Spanish trading room. But Tony's not really that interested in learning Spanish. I'm only joking here. Tony's not that interested in learning Spanish. He does speak a word or so. And the thing is that there's not that much of a market for, you know, for a sort of a second trader at the Spanish division. So that's sort of the setup there. There is a bit of similarity, but there's nothing here identical. Nothing. Oh, look, Tony's there.
Tony's here.
All right, I didn't see him. Oh, there he is. Hey, Tony?
What's the difference between this service with capital discussions and what you're going to be doing with option elements?
It's completely different. It's not completely different. There are similarities there, but it is different. It is different. It is different. Basically, Tom, what's happening here is that we are using a lot of our in-house algorithmic systems in going in and out of the trade. As I say, there can be similarities. But they are completely different trades. So anyone that is at option elements and signs up for this service, they're two completely different sort of services. They have nothing to do one with another. Okay. But I mean, what you may see here possibly is
maybe we can come
similarity in my style of trading. That's all I can say. So similarity in my style of trading. The thing is that I must say that I have quite a big team of people working with me here in Spain for option elements. So I hope that they're going to be helping me to develop the optionelements.com site as well. But obviously we're not going to be mixing trades. I mean, we're not going to be using the same trades on one service as we are on the other web. No way. Okay, Tony. Well, Ricardo and I have different styles and time frames that complement one another in terms of risk profiles. Yes, exactly. I mean, this is what I've been saying. Exactly. So that's sort of our idea, and I hope it works out.
Well, and maybe we can come up with some kind of special offer. If you're subscribing to one service, get a special price on the other, something like that.
Yeah, definitely.
Well, we've been going close to an hour, so I don't think we have any more questions. Is there any last things you want to say before we wrap it up?
No, I just didn't want to go on too long, Tom. I just, I didn't want to bore people and things. I mean, the crux of the service is here. It's been presented. As I say, if there are sort of any other questions that people haven't asked today, just please send me an email, either at Option Elements or at Capital Discussions, and I'll quite gladly answer those emails. I've already received several. Just wondering now.
And there is a 15-day trial, so there are weekly trades involved, so you can't get a couple of trades in for sure during a trial period, so give it a try.
Kevin, when you say, is it a more directional trade, which trade are you referring to? Which strategy are you referring to? There are certain strategies in the earnings trades that are directional, and there are others that aren't directional. The volatility edge is really not that directional. Not really that directional. And the Platinum Rut 2000 is it's not directional. No. Although I don't know which trade you refer to there. But anyway. All right. Well.
All right. Thanks again, Ricardo. Appreciate it. Look forward to it. And if anybody's on the fence or has any questions, please let Ricardo know what your questions are, and we'll get those answered for you. But give a trial a try and try out some of Ricardo's trades, and if it pays for the service, fantastic.
Yeah, exactly.
All right. Well, thanks, Ricardo. Thanks everyone for sticking to the.
Thank you all
very much.
Cheers.
All right. Bye-bye, everyone.
Bye.